Okay, well, welcome everybody to this session of PACE webinar. We have an exciting presentation today on management accounting, leading business into the future. And I'm excited to have as our speaker today, Larry White. For those of you who aren't familiar with PACE, we're the Profitability Analytics Center of Excellence. We're a professional association dedicated to helping organizations make better, more informed decisions through the use of data analytics. If you'd like to become a member, it's free. You can go to profitability-analytics.org and sign up. By doing so, you get access to our other webinars, podcasts, articles, ebooks, and many other resources. So again, go to profitability-analytics.org and become a member today. Before we get started, we have a little bit of housekeeping to go over. If you'd like to receive NASBA CPE credit today for attending today's session, please be sure to use your actual first and last name when you registered. If you need to edit your name on the screen, click Participants, which is located at the bottom of your screen, and then hover over your name on the list. Click the three dots, and there's an option there to rename. Please note you have to attend at least 50 minutes of today's presentation and answer at least 3 of the 4 polling questions to receive a certificate. The session is being recorded, so please keep your camera off and your microphone on mute until our Q&A session at the end. If you have questions, just drop them in the chat feature and we'll answer them at the end of the session. With having said that, over to you, Larry.
Great. This is a little bit about me. While you peruse that, if you so choose to, on a lot of the slides I have today, I will have some literature at the bottom, most of it being PACE literature, that are things that are readily available at PACE and talk a little bit more deeply about the subjects I'm discussing on each slide. So let's go ahead and get started. Management accounting, leading business into the future. So the first thing I always need to do is discuss the term management accounting, because I hear a lot of really interesting definitions for management accounting. I define it as internal decision support for everywhere and everyone in the organization. Definitely not just cost accounting required for financial reporting and tax. So management accounting and profitability analytics are really about looking around your organization, looking at your customers, your markets, your operations, your logistics, and seeking opportunities to improve profitability or whatever your organization's strategic goals are. It's future oriented. Profitability analytics and management accounting look ahead. They find paths to future success. Now let's think for a minute about the finance function. You know, with the impact of technology, automation, and AI, routine work will diminish. We've been saying that for years. But what's that leave? It really leaves design, insight, and oversight. A comparison for me, because I spent a good chunk of my working life in the U.S. Coast Guard, is navigation on a ship. The main purpose, surprising to many people, is not where you are, and it's not where you have been, but it's where you will be, and that's hopefully in safe water. Traditional accounting has been history, looking back, learning from the past. Is that still relevant? Is that still important? Of course it is. But much depends on how you look and what you look at. What most accountants ignore or forget is that financial accounting and reporting is only one model of the business, one view of business. You need to be looking forward towards the future with scenario planning and design, predicting, modeling, and integrating. You need to be identifying causal factors, improvement options, and exploring the likely effects. The growing challenge for accounting is to figure out how to add more value and how to maintain its status in a world that automates all the routine things we've traditionally done. Transaction processing, financial reporting, tax reporting, cash management, they're all pretty routine and likely to be highly automated. There is a real threat if our profession doesn't act fast enough. Manufacturing enterprise solutions are starting to include costing and economic analysis as part of their software to help manufacturers' internal decision support needs. Keep in mind, a great many of the leaders in management accounting thought have been engineers. Consider Henry Gantt, Bob Kaplan, Gary Kokens, the founder of IMA, Major J. Lee Nicholson. If we don't act rapidly to meet our customers' internal decision support needs, especially the forward-looking strategic and tactical insights, other professions will move in. There was a famous Harvard case study about Citibank. It's decades old, but it's still highly relevant. Citibank realized at one point it was spending too much time and money and moving way too slowly on its back office processes, which included accounting, but many other things. It addressed this by hiring production engineers from auto manufacturers. And this led to Citibank's dramatic rise to a top tier and at the time the largest bank in the world. It wasn't just about automation then. It was about process improvement, optimization, management, and leadership. And today, even with all of the technology that's available, it still is about those non-technology things. I'm going to go to the first polling question. So, this question is, are you preparing for your financial staff and yourself for a much more fully automation and AI world where your primary value will be to help drive business strategy and profitability or other performance improvement if you're not in a profit-making organization? And select an answer and submit it.
And just a reminder for those interested in CPE credit, you need to answer 3 out of the 4 questions today to get CPE credit, as well as attending 50 minutes of the session.
I'll leave it up to you, Rafe, when to show the results.
Absolutely.
All right, that's a good answer. We got all yeses or to some extent, so we're seeing good forward progress. Okay. So, yes, we are back to the same slide. Don't be surprised. I did that on purpose. Because there's a second question on here. It's financial transformation or business transformation. Where do accountants want to be? Like you, I get a great many invites to webinars on financial transformation. And what they're normally talking about is automating accounting processes or speeding the monthly close. Now, the question is that going to make the management accountant a true business partner? Is that going to win you a seat at the table developing and planning a company strategy. I mean, frankly, I was doing payable automation in 1988. We were working on automated reconciliations in 1990. And I was in the federal government, not exactly a well-recognized accounting innovator. The questions are, what are the insights that matter in business? Are they in the general ledger? Some elements may be in the general ledger, but the general ledger is history constructed for a specific reporting model. What information really drives your business forward? That information is the marketing, customer, operational, logistics data. The data about your organization and about the environment your organization works in. Those things happen first. Financial data is a lagger. Financial data is used to make all that information comparable and sometimes help decide among alternatives: terrible, bad, good, better, best. You know, some things about business are pretty obvious. You know, in general, more sales, more customers are generally better, with the caveat that it needs to be profitable, which isn't always the easiest thing to analyze. But we work at it here at Pace. Doing the same or more in a quality manner with less resources is always great. You know, manufacturing has made huge strides in efficiency, largely ignoring traditional cost accounting information, just using logic, good sense, and fewer resources to do more, faster, and better. My message is that if you want to move beyond financial transformation and be part of business transformation, you need to think well beyond financial information. You need to understand what drives the business, what drives customers, and these will drive financial results. How do you get there? How do you lead not just finance, but business into the future? Well, I have 6 suggestions listed on this slide. You know, understand your company's operations and lead. Provide the information they want, not just the information you have. Integrate financial information with leading business indicators, such as operations, logistics, sales, and marketing. Think revenue and customers first. Think broadly about investments in the business, and we'll talk some more about that. And finally, perhaps even most importantly, identify and elevate great people. So let's get started. Whoops, did I miss something? Yes, I missed one. Sorry about that. Item number 1, understand your company's operations, production and service, sales and marketing, customer service, logistics, and the data each uses for its common decision. Now, this isn't really a technical problem. It's really a leadership challenge. Leading companies often rotate their accountants through every aspect of the business. However, lots of companies are too small for this type of program. But why not assign some of your people as specific internal customer liaison? I've always assigned fairly junior people to each division to help so that they can help the division with whatever they need in finance. The big task was typically developing their annual budget and doing monthly reviews of their spending progress. But at the junior level, and this is important, at the junior levels of the organization, there's far less politicking, far less gaming than when a division chief meets with a controller or CFO. Plus, getting your folks out helps your people develop, and it helps the divisional personnel with their local financial interface. What you have to make clear is that your folks aren't enforcers. Your folks are out there to gain an understanding of the business and communicate internal customer needs back to you. I always encourage them to be advocates for the business, part of the business they were assigned to, not my representative to clamp down. This brings up lots of questions. Do you understand the decisions your internal customers make, the data they use, the resources they rely on most, the type of feedback they react to from bosses, customers, and even you, finance? Do you know the data they look at each day, each week, each month? And what data are they missing from you and from others? When you can answer these questions, advocate on their behalf, and provide valued support, you build the kind of trust that makes you a business partner. The term servant leadership is often used. It's really where you seek to be of service, not just to your boss, but to your organization and everyone in it. You need to seek to understand to be of service. Internal customers are critical customers, perhaps the most important. As I look at it, it's really about helping people build their dreams. The overwhelming majority of people come to work each day to do good things, and they appreciate those who help them. I always want to be one of those. Okay, let's go to another polling question because we have to get CPE. Who should be your most valuable customer for profitability and value creating information? Okay, I've got 4 choices there. Pick one. You probably know where I stand on this, but I'm curious where you stand. Remember, your CPE depends on answering these questions. So if you've strayed from your computer screen, rush back now. Okay, so, well, I came in second with mine, internal peers. A lot of people picked shareholder, owner, and board, and a lot of people picked CEO or your boss, which is understandable. But I like to think if you can do the third one well, internal peers, the rest will happen in the natural course of events. So let's talk maybe some more about that. Because my second suggestion is to provide the information they want, not just the information you have. My guess is you have the information that you need to provide to the CEO and the board of directors and external shareholders. Financial accounting and reporting conventions, as I've said, are really just one model of the business. There are others. Financial accounting, as we all know, is fundamentally historical and backward looking. It is required to represent the principles of financial reporting standards, such as whatever the revenue recognition principle is, matching principle, materiality, consistency, and so on. But sometimes the mystery question is, where do you find the principles for a causal internal decision support financial model? Well, let me offer a solution. There's an IMA SMA, Statement on Management Accounting, titled The Conceptual Framework for Managerial Costing. I'm almost positive it's on the PACE website as well. And it defines the principles for internal decision support financial information. The primary principle is causality, or cause and effect, for internal decision support. Causality is based on the scientific method and something called the correspondence theory of truth. Now, did you know there are 5 major theories of truth? Yeah, go to Wikipedia. They'll explain it. Only the correspondence theory supports the scientific method based on observable evidence and does not include any allowance for human judgment or human consensus. In business, ideally, that is what you want for decisions. Financial standards include huge allowances for human consensus. Think about the standard setting process. Think about things like, should depreciation really be based on the Earth rotating around the sun? Expensing R&D, which is a clear investment in the future. And there are many other examples where some of the things in financial accounting rules just don't follow causality. As you develop information for your internal customers, the financial information must reflect the reality they see in resources, customer actions, and in the processes they manage. They really don't want to hear what you have to do to make financial statements pass an audit. They want to see their actions, their decisions, their effort reflected in relevant, actionable financial information. And as you invest in data analytics capability, you need to keep this in mind, or your efforts simply won't be used to guide the business. Business decision information needs clear causality. Financial accounting information in the general ledger doesn't always correspond to operations. The Profitability Analytics Center of Excellence very much focuses on causal financial information for internal decision support. Use PACE's resources. Suggestion number 3, integrate with operational, logistics, and sales and marketing systems. To do effective data analytics, and certainly artificial intelligence to provide business insights for strategy in the future, you will need to build financial models that reflect operations, logistics, and sales and marketing systems, real resources, and real processes. Modeling scenarios for the future must reflect the operational model of the organization. Otherwise, your leaders and your peers won't get a clear idea of what is going on. Yes, at some point, you'll need to project in accordance with financial reporting standards, but first, you need to allow everyone to see the causal result of resources and operations, basically their decisions and the changes they make. This means you need to consider a managerial costing model separate from your financial accounting system. And it needs to very quickly reflect changes from operational, logistics, and sales and marketing systems. This can't be a quarterly or even a monthly upload. That won't cut it. Real-time integration is increasingly becoming the norm and the expectation. A set of well-designed spreadsheets with extract, transfer, and load functionality is often the place to start. Moving to business intelligence, database software, as you learn more about what you need. ERP systems like SAP and Oracle can often handle multiple models and provide nearly continuous reconciliation, but they need to be set up that way at initial installation. Oftentimes, you have to completely reconfigure an existing system to handle multiple models. Sometimes a third-party software or middleware can be integrated effectively to improve causal financial internal decision support information. The key is understanding the financial information your organization needs over a broad spectrum, from the many day-to-day decisions. That's what your peers and folks in operations and sales and marketing will use, to developing effective and innovative strategy, the information your C-suite and board will want to see. This is not an easy task. One big problem, of course, that stares us all in the face is that senior management bonuses are often tied to financial reporting information. And they know the many games that can be played to extract the largest bonuses. Causal financial information is a new and unfamiliar territory for them. Improvements in organizational agility, cooperation, and profitability will help them see the benefits. This bias towards financial accounting, which is often promoted as the one version of the truth, is something, it's a reality for people that are trying to do internal decision support information. And it's one we need to deal with. What I would encourage you to do is keep your eye on the conflicts that arise, the issues that arise, where people around the C-suite table say things like, this isn't right, this isn't fair, this isn't reflective of what's going on, and key in on helping to solve those kinds of issues. Okay, we've got another polling question. Number 3, where is the greatest profit enhancing opportunity in your business? So I've got a few choices there, and I've got an other. If I didn't think of something you wanted, there's probably an infinite number of choices, but I tried to categorize them into the big ones. Again, if you've strayed from your computer, come on back and answer the question if you want CPE.
And I do want to remind everyone to be sure they're enrolled in this webinar with their real name if they want to get CPE credit. If you are not, you can go to the bottom of your screen, click on the participant tab, and click on the 3 dots and enter your name in order to receive that CPE certificate.
All right, well, this is good. 58% of you agreed with me, but you know what? All of these are profit enhancing opportunities, so there's certainly not a wrong answer. So let's move on to number 4. So answering the question I just asked, revenue and customers are potentially unlimited. Cost management only goes too far. You can do a great job of cost management, just shut down the business, and you'll have no more. But revenue has unlimited potential. And revenue is, sadly, a traditional area where accountants exercise skepticism over overly enthusiastic sales and marketing projections. But sales and marketing is a very important part of the organizational team. My advice, seek to understand and help them get it right. Not just the projection part, but the actual operations part, positively and constructively. PACE has many documents on revenue management. We actually learned about this topic from 3 accounting professors in Auckland, New Zealand. They had the most popular course in the Graduate School of Business, and it was titled Revenue Management. What did they teach? Well, what's interesting is they actually taught management accounting, but completely from a revenue growth point of view. You know, think about what airlines and hotels do with their time sensitive capacity. Every business has the potential to segment and manage customers based on the value provided. Surprisingly, marketing really does not teach revenue management, but it's an area where management accounting knowledge and skills is very applicable. So what does revenue management look like? Well, there are fundamentally four levers that can be used to improve revenue management. The first one is pricing, differentiated for customer needs and the value provided. The second one is inventory or capacity or time. Do you change for high demand? Do you charge for high demand and discount appropriately to build demand? Product configuration or service configuration. Do you charge differently and appropriately for different configurations? Could you create or eliminate some configurations profitably? The last one, duration control, or really kind of customer control. Do you manage, incent, or disincent various customer behaviors? Do you adapt your operations to customer behavior? Take a look at the graph in the lower right-hand corner. The left side of that is a traditional demand curve where you have the demand curve, the dotted line, and then you have a price and a quantity that you're going to sell based on the service or product you provide. The chart on the right shows that if you have different configurations that apply to different customer demand, the value you create for different customers or the little value you create, you can capture a whole lot more of the space under that demand curve, naturally subject to profitability. So by understanding resource management, you can contribute to growing revenue and profitability for your organization and become a value-added partner to marketing and sales, and frankly, to everybody else. One cost area that gets very little attention and that financial accounting is really bad at is customer costing or customer profitability, depending on how you want to look at it. If you have a customer that orders one time a month, takes immediate delivery, and pays regularly, that's good. But you may have another customer who orders the same quantity over the course of the year, but highly erratically, with lots of changes and complaints, and then normally needs several phone calls from receivables before paying. Are they equally profitable? You know the answer. Do you know which is which? Some customers take lots of salesperson, lots of technical staff, even executive time. Do you know which customers those are? Do you know how much this impacts profitability? Understanding customer cost and profitability is a foundation to understanding how to grow revenue and your customer base profitably. Management accountants can help design and add great value in this process. It's a fruitful area, often a fairly easy sell to senior executives for investment in new models, integration, and today, artificial intelligence. Okay, final polling question, or the polling question for those of you who missed one of the other ones because you didn't get back to the computer in time. How does your organization think about investments in the business? Do you think about capital assets? Do you think about acquiring companies? Do you think about personal brand development, R&D, etc.? And then a few combinations of those that you can consider for yourself. I didn't put another here, so you're stuck with the best answer you can select.
I do want to remind everyone that we will be taking questions at the end. So as we go along, if you have a question, please put it in the chat feature.
Okay, what a group. I like this. Um, Good answering, everybody. And I think you're gonna enjoy the next suggestion, which is to think about investments broadly. And by investments, I do in fact mean tangible or capital investments and intangible non-capital investments. All of you are aware that net capital assets or book value as a measure of company value is no longer relevant. The vast majority of capital market value is intangible. Yes, you can argue that it is future earnings growth, but that's caused by investment or spending on capability that does not get recorded on the balance sheet. I suggest you up your game beyond traditional operational and capital budgeting and think about how to manage and encourage investment more broadly in your organization's essential strategic capability, thinking well beyond just physical capital. Intangible investments generally revolve around brand capital, such as creating and maintaining brands your customers have confidence in, and to some extent, your company reputation. Human capital, things like recruiting and retaining personnel, and having great processes to grow their capability and creativity. Innovation capital, things like research and development, process improvement, market and customer research, intellectual property. And finally, and increasingly important today, data and analytics capability. A digital strategy and ability to execute it to incorporate lots of capitals into corporate and organizational capability. Proprietary data that you have, maybe the flexible architecture, rapid and adaptive implementation capability. The interesting aspect of intangible assets that's starting to be explored is that investment in intangible capability appreciates as it is used and developed, whereas, of course, physical or tangible capital is known to depreciate over time. Again, you'll need to do some education with your senior management and board or owner, but this is a strategic discussion, and you will come across as an innovator and strategic thinker. And it is highly likely that your peers across the organization will support you, since on some level, even if they haven't articulated it yet, they see this happen. It's also a challenge for data analytics and internal decision support information to place more emphasis on projects and investments that were often buried in divisional budgets and operating expenses, and really should be looked at the way capital investments are looked at. Now, the last thing is in some ways obvious, in some ways something we too often take for granted. And this includes identifying and elevating great people. And this includes yourself. I found this list of 12 rare traits that separate high performers from everyone else. And I think they're important to identify. I don't get credit for thinking of this. The credit goes to a gentleman named Justin Wright. So I'm going to read through these. I have a little bit of explanatory information. Number one, they don't wait to be asked. They see what needs doing and handle it. They take action without being told. They stay out of drama Office politics drains energy. Solutions create energy. They focus on results, not rumors. They fix what's broken. Anyone can point to problems. They solve them. They bring answers, not just complaints. They admit what they don't know. I'll find out shows strength, not weakness. Then they learn fast and close the gap. They turn ideas into action. Talk is easy, execution is rare. While others discuss, they deliver. They truly listen, not just waiting for their turn to speak. They hear what others really need. They balance data with instinct. Numbers matter, but so does intuition. They generally know when to trust each. They spot hidden patterns. Where others see random events, they see connections. This ability to anticipate creates massive value. They handle challenges with high EQ, emotional awareness. Pressure reveals character, stress tests resilience. They, they respond thoughtfully, not just emotionally. 10, they finish what they start. Starting is common, finishing is valuable. Their word is their bond. They make work better for others. Value isn't just about your personal output, it's about helping the whole team shine. They lift others up without seeking credit. True help comes with no strings attached. They cheer for the team wins just like their own. These traits aren't about intelligence. They're about daily choices and commitment. Anyone can develop them. When you find them, value them, seek to guide your people to develop them. So I've run through my 6 suggestions for management accounting and profitability and analytics as a way to take your business into the future with a bit of an emphasis on what you can do as a management accounting and financial professional. I hope you found them helpful. I know I didn't provide technical solutions, but I hope I can help you think outside whatever box or encourage you to move beyond the box you're sometimes put in. I also want to emphasize that I think PACE does really the best job of following up and providing information and insight into how these tools work. So I guess I have about 5 minutes left for some questions. Rafe, do we have any?
Sure. And before we get to those, I just want to thank you, Larry, for that very interesting presentation. You know, we all know about the challenges that AI is presenting to the management accounting profession, but it's such an exciting time as well, and such tremendous opportunities to really help advance our organizations, to help serve as business partners. And I think these 6 issues that if we address those are a good roadmap to doing that. And I also want to mention, as you said, that PACE really is the lead organization, I think, in this area. And you showed quite a few resources that are available in your presentation, all the ebooks and other resources. And again, I'd like to encourage everyone to go to the PACE website, profitability-analytics.org, and all our members can access those resources for free. So before we get to the questions, we will push out our end of webinar poll question. And if you do have questions, please put them in the chat feature and we'll move on to those now. So there's a question about getting a PDF of your presentation. So
Well, I'd be happy to send that. I think I think we're going to put it up on the PACE website probably in a day or two, maybe even faster.
we
But
will, and sure. And if you're in a rush, Larry's email is here, and feel free to reach out to him for that file.
It's also been posted in the chat.
Has it been posted? I didn't see that. There we go.
Yeah.
Thank you, Toby. Great. So I've received a few questions. One is that you're suggesting management accountants engage in revenue management, and I think that's probably something that's shocked or at least surprised a lot of the attendees today. And the question is, isn't that a marketing uh, function or a marketing area?
well, you know, I always thought that. I got to admit, revenue management is the newest of these ideas to me. And since then, I've made a very distinct effort as I talk to people in academia and say, do they teach this kind of stuff in marketing? And surprisingly, they don't. Um, and once you get into it, making a sale is great. Making sure that sale is profitable means you need a management accountant around to to analyze the marginal revenue versus the marginal cost. And certainly, as you get into things like um, you know capacity costing is a big area um, where once you identify that you have underutilized periods and unused capacity that is just sitting there, then you want to generate revenue on top of that. And the math, the sales guys are really good at the sales numbers. They're not so good at finding out exactly how profitable that sale is. So there's a whole bunch of areas where I believe accountants can help identify um, opportunities to increase revenue. I mean, design engineers and R&D folks often come up with ideas for product configurations. A lot of times the initial reaction is, oh, we can't have too many SKUs because that makes things so complicated and that drives up cost. Well, fine. If it drives up cost, the question is, will it drive up revenue? Okay, because that's what the goal is. The goal is profitability. The goal isn't minimizing cost. The goal is maximizing profitability. So, I wrote a blog for Pace, I think, called Rules of Thumb. And that's a lot of selling and a lot of contracting in corporations is done based on rules of thumb. And those need to be carefully examined because we need to apply some real cost rigor. I mean, in the old days, you just looked at cost of goods sold. If you beat that plus whatever your projected or desired profit percentage was, it was like, go for it. But that misses a whole slew of customer cost issues. There's selling commissions, there's selling time, there's engineering time, there's executive time, there's complexity in your warehouse, there's complexity in product delivery, there's complexity in receivables, there's complexity everywhere in your organization, and you need to be aware of how all those things feel about your customers. The other thing is customer segmentation. How much value, how much are you selling at a bargain to a customer who gets incredible value from some aspect of your product or service? And you need to be aware of that because that's going to influence your pricing. You should not, we all know you shouldn't price on cost. On the other hand, pricing based on just quote unquote market is also difficult. So one of the keys is understanding your customers and the value you provide and segmenting that so that you can have more profitable customers. That's what the key is, more customers that are profitable. I think most people have seen a whale curve where it shows bunches of customers create profit, and then there's also a good number of customers that often consume profit. You don't want that. You want to be aware of it. You want to make the good things happen. And management accountants are a huge part of providing highly specific and causal cost information. I don't like the word relevant because relevance is to some extent a state of mind, but the causality of costing takes the relevance out of it and goes to the underlying facts of what is really consumed when a sale is made. I think that answers the question, but
Yeah, very good. Thank you. So I think most of us are convinced by this presentation on the role that management accountants can play in advancing their organizations, but there are roadblocks, and there's a question that speaks to that, and it's like my company considers the financial statements as the one version of the truth. How do I convince them to look at other financial information?
okay, yeah. So if there's when I'm listening to an accounting like a free CPE presentation or something, there's one set of terminology that just sets me off. I probably turn red sitting at my desk, and it's when someone says the one version of the truth. And it just, if I have the opportunity, I interrupt people every time they say that because the one version of the truth is wrong for a lot of things. And I gave some examples of where it's wrong. Depreciation is an example of where it's wrong. R&D. You need to recharacterize all those things, not only for strategic decisions, but you sometimes need to recharacterize them for the micro decisions you're making about profitability on customers. So, however, convincing people that there's not one version of the truth is hard because there is that financial statement, and if they screw up the financial statement, people can go to jail, and it'll cause a restatement that has a very direct market impact and things like that. So I think I said this during the presentation. I always recommend that you listen for where the disputes arise, particularly around the executive conference table. Where do people say, but there's more to the story when they're looking at financial statements? And you also look for those things among the lower levels of the organization and highlight them when they come up and seek to provide information that allows them to make better decisions because the information is causal and directly linked to things they do and understand. It takes some effort. It takes a lot of effort. It takes a lot of education. People sometimes get tired of you repeating it, but they will start to get it. And when they do, it will allow for substantial improvements. I'm not saying that there's anything wrong with financial statements. I'm just saying we need to go beyond them. I don't spend any time trying to fix what's wrong with financial statements because they're fine for what they do. I'm just saying we need to go beyond them.
That's the old adage, different information for different uses, right? So,
That's true.
yeah. So the next question is, finance has traditionally been a control function, and a certain amount of objectivity and adversary are necessary. Are you suggesting we abandon that?
To some extent, I would say yes. Okay, the sad fact is the accounting profession has had a majority career path. People study accounting in college, they get a job as an entry-level auditor for some number of years, and then they move into industry. And the thing they're really good at is auditing and doing financial statements. They're not necessarily good at doing business support, helping their peers create relevant information for the things they do, coming up with new models of the enterprise. So there is a control. I mean, when you see fraud, when you see somebody cheating, when you see that happening, um, you know, you need to address it. There's no excuse for not doing that. But if that's where your focus is, you aren't going to be helping people. You're going to be critically judging them, and they're going to know you're critically judging them, and they are not going to respond well to you. I mean, my favorite story is I speak to a lot of manufacturing groups, and I always ask them to raise their hand if they perceive their finance and accounting department as a strong business partner or as a business partner at all. And typically I get 10% of the hands raised. Occasionally I've gotten to 20 maybe. Then I ask if they see their accounting and finance department as a hurdle, a roadblock, an obstacle to be overcome. And of course, the other 80 to 90% of the hands shoot up. But that's our real perception. And there's a reason for that. And I'm not sure that it creates the same amount of value as doing the things I presented here today create. In fact, I'm pretty sure it doesn't. So that's how I would answer that question.
Great. I think we have time for one last question, and it's maybe something that a lot of folks on this webinar are experiencing. And that's our finance function is under pressure to reduce costs using automation, AI, and outsourcing. What can be done?
All right, here's where making friends with the salespeople is going to help you a lot. Because what you really have is a sales problem. You're not selling your value. Okay? The board sees you as valuable only to create compliant financial reporting. They don't see you as a strategic business partner, as a value add, as someone who's supporting the rest of the company. So if that's your primary problem, you have a major league marketing and perception problem that you need to correct. And I got to tell you, I would treat it as an emergency. Okay, so yes, you do need to do all those things. You do need to, become more efficient. However, what you need to do is be able to move those savings into more value creation work, doing the kinds of things I talked about today. So I would say you've got a serious problem, and you need to figure out how to sell yourself and your capabilities much better. On the first slide, I had a book by Doug Hicks. The profitability, what's the name of it?
Profitable expectations.
Profitable Expectations. Start with that book. And it's about a young woman who had the typical career path and learns how to become a real business partner. And it'll give you a really solid, with very detailed examples in some cases, set of steps that you can take.
And I would just add that that book is written as a novel, and it's written for any business professional. So hand it to your sales and marketing folks, and I think they'll get new insights into the value that management accountants can add to an organization.
Great idea, Reed.
So we've run out of time. Thank you again, Larry. It's been, I think, a very insightful presentation today. Hopefully everyone enjoyed this webinar. If you'd like to learn about others coming in the future, go to PACE's channel on LinkedIn, where we post information regarding forthcoming webinars. And also be sure to sign up for PACE's newsletter on our website, where you'll learn also about future events. And with having said that, thank you everyone for attending and see you next time.